So what is happening in Indian economy? First of all, thanks to some of the good fund houses like Kotak Mutual Fund and Ikigai and Motilal Oswal, from where we have collected these data points, and I'll share that with you.
Hi everyone. First of all, thank you for taking your time out and joining us from your busy schedule. At AIF PMS Experts India, we are thrilled to introduce our brand new show called Ask the Expert Show. Through webinars, we aim to share insights into diverse asset classes, exchange knowledge with our investor community. So my name is Devanshu Bindlish, and I am the Vice President of AIF PMS Experts India. With me, I have a, I have someone special and the speaker, Mr. Vikas Agrawal, founder and CEO of AIF and PMS Experts India. And the topic of webinar is to share our house view on markets as the markets are extremely volatile from the last few days. Let me take a moment and introduce Mr. Vikas Agrawal. It's my privilege to introduce him well. Mr. Vikas Agrawal is an MBA graduate with specialization in finance. He also pursued various investment courses from Flame University, Pune, with over 2 decades of expertise in the asset and wealth management industries. Mr. Vikas Agarwal has emerged as India's most trusted voice when it comes to investing in alternative investment funds and portfolio management services. He also shares insights to investors via his blogs, podcasts, and periodic webinars. Hello, Mr. Vikas. Welcome to Ask the Expert Show. Over to you.
Yeah, thank you, Devanshu. Based on the request from most of the investors, because markets are very volatile, they wanted to, know more about what's happening in the economy. A, B is they also wanted to understand what are our views on the market. So I thought, we've done some homework. We'll try and share some data points if that can be used as some sort of analysis for them to be able to take right decisions. So let's move ahead. If you give me the rights to share the screen,
Yeah, sure.
I'd like to just share the presentation and
I think you can share the screen.
right. Yeah. So can you see my screen?
Yeah, I can see your screen.
Okay. So is this visible?
Perfectly.
All right. We'll start the conversation. So first of all, thank you. First of all, Devanshu, thank you for introducing me. Um I can see there are some investors who have joined here for the first time. So I welcome all of them here with the bottom of my heart. Thank you so much for taking the time out from your busy schedule and joining the call today. What we're going to do is to share our views, our house views on the markets. So that's about us, AIF and PMS Experts India. We are we try to provide different analysis altogether today. It's about AIF and PMS Experts India. As you can see, when you follow a right inputs and when you have a good process in place, then you see the outcome is either immense or they are similar to what you are expecting them to be. So our attempt in the wealth management industry is to ensure that we have right processes in place, processes in terms of selecting the right portfolio managers, constructing the high quality portfolio, and that will give us the kind of expected outcomes that we are looking out for. That's about us in terms of our media interaction. Uh, I always tried my best to educate as many investors as I can through various blogs, podcasts. In fact, ever since we've started, we've completed about 4 years now. In the last 4 years, we have interviewed more than 208 portfolio managers. That clearly indicates the kind of consistency that we have as an organization. At the same time, our commitments which is non-negotiable, which is to educate and empower the investor community as a whole. These are process, which I was referring to, where we have something called 3 I's framework. The first I is basically when we evaluate the portfolio managers, we evaluate them on a couple of parameters. So first thing that we look at is the investment style. That's our first I. So there are portfolio managers who have different styles. For example, there are portfolio managers who follow value style of investing. Some of them follow GARP, which is growth at a reasonable price. Some of them may be contrarian. Some of them may have a different framework, which is more of quant in nature. So we look at different styles of the portfolio managers, and basis that we allocate the money, give the mandate to the portfolio managers. The other thing is because we come from research background, we understand what the quality meaning of the quality in terms of stock selection. So we see to it that we like portfolio managers who are quality conscious, as in they're not buying companies for sake of buying, etc. So we see to it that the quality of the portfolio has to clear the acid test, which we have created within the organization. Third is the investment performance. So, what we do not like is the roller coaster ride, as in we don't like portfolios which are either in Q1 or in Q4, and they're, very first quarter they may be in Q1, and then second quarter they are in Q2. We like somebody consistently delivering maybe Q2 performance, but consistently delivering Q2 performance for over a period of time. These are sole framework. So basically, this framework is something that we lived through. We have taken a lot of time to prepare this, and what we have seen, I spent about almost 2.5 decades in the industry now. And one of the understanding that I have is, I always see to it that the portfolio managers, what kind of skills they bring on the table, what kind of knowledge they bring on the table, or we also examine that it is only the luck which is working, because there are times when you can be lucky and your portfolio can deliver extraordinary returns. And a lot of investors come to us and say that, look, this portfolio has outperformed, this much of returns, outperformed the peer group, and you should be considering investing with those portfolio managers. So we say clearly no to them, in the sense that until and unless we are very confident about examining the portfolio manager, their thought process, their investment philosophy, and there are 57 different parameters through which we evaluate the portfolio managers. Unless that is clear, we do not approve them. So we always prefer to be on the right hand side, which is high skill and high luck. That is the best position. So skill outperformance while avoiding pitfall of the underperformance and luck-based investments. This is a recognition, as an organization, we were awarded by Financial Freedom Fraternity. They were in association. They had an association with the Economic Times. We got the AIF Achiever Award, where we've created a beautiful platform called aifpms.com, where idea is to get more number of good quality portfolio managers and try and work closely with them. That's about me. Devanshu has already introduced me, so I'm not spending too much of time. Now coming to the topic that we have, which is market outlook. So what we'll do is first I'll give you perspective about what's happening globally. Then I'll try and give you understanding about what is our understanding, what's happening in the US markets, more particularly after Trump coming over. And then I'll give you some parameters, some analysis on what's happening on Indian equity markets. There is this word, Trumponomics, which is, getting very famous, especially those who are on WhatsApp and Twitter may know. So everybody wants to know what would be the impact of Trump taking over the president position and what is going to happen in the US. So clearly, when I mean, it's very difficult to predict Trump, but clearly what analysts are assuming based on the 4 years of stint that they've seen the US earlier is that he is in the favor of lowering down the taxes for the corporates. That's number one. Loosen the government regulations a bit in terms of monetary and fiscal, and going to put some tariffs on different countries, especially China. So let's look at the global economy. Well, major central banks are easing mode. When I say easing mode is the liquidity, percentage of central bank in easing mode is, when you look at globally, this is a clear indication that based on 34 central bank as of today, percentage of central bank in they are they are they are basically in easing mode. When you look at the global markets, you look at the inflation. Inflation is also showing sign of easing across the globe, not only in India. And these are few data points. When you see UK, Eurozone, US, Japan, and China, now these are the major markets, and all of the markets that you see, they are in the tune of 1.5%, 2% to 2.5% broadly. So that clearly indicates that inflation as a number is also slowing down globally. Now, what is happening in China? China is continuously witnessing a growth target is slowing down out there, as in the targets, what they were carrying initially at the beginning of 2024, and the numbers are clearly going down. India continues to be the top performing and highest contributing in terms of GDP to the globe, whereas China is slowing down. The economic momentum has warned, and amid persisting property slump, tight fiscal stance, their targets are going down, and their GDP numbers are also going down. Well, this is a very interesting slide. When you look at globally, the global debt has reached to almost $313 trillion. By far, historically, this is the highest number one would have ever seen. Even if you consider the total size of the capital markets, the equity valuation, the market caps, maybe around 100 trillion dollar. This is even 3 times more than that. So global GDP numbers are going up. That's one of the concerns, particularly in US. This is also going up. When we talk about US, I'll show you the data. On the other side, China, their factory activities extend declines. They continue to decline. Their manufacturing PMI, non-manufacturing PMI, and services PMI, all the numbers are declining. That also indicates that China is clearly in slowdown. Now, when you look at the geopolitical risk, which was highly elevated. Now, after Trump taking over, and Trump has been he's mentioned this very, very categorically that, he doesn't want to give support to the war, as in he doesn't want to fund those countries. So, and we are already witnessing early sign of ceasefire taking place in Hamas, and you never know if the same thing can happen between Russia and Ukraine, where he has given the indication that he's not in the favor of wars, and he doesn't want to fund those countries like Ukraine anymore, and that would perhaps help the entire globe to settle down. So geopolitical risk clearly looks to be lowering down, keeping in mind that Trump as a global leader is going to take over in the US. Fed is known for maintaining the balance. They are the best regulator, I would say, when it comes to liquidity management of the cash flows and the money movement. So the Fed is maintaining a very delicate balance between growth and inflation. While the inflation number we just saw is very much controlled, at the same time, they don't want to compromise on the growth side. So maintaining a balance is very important. And this is what is happening, you know, particularly when you look at,
Vikas sir, you are on mute.
yeah, can you see, can you hear me now?
Yeah.
Okay. So I'm saying that the Fed is maintaining a very delicate balance between growth and inflation across the US markets. Uh, Inflation fell to 2.4%, moving close to the Fed's 2% target. This is also a very good sign in, in the US that we already covered that inflation numbers are well controlled. We want to also take a minute to talk about the one second. The yeah, okay. See the debt which is surpassing more than $35 trillion. That is a big concern for the US economy. And there are analysts who say that anything can happen to US markets. It can happen tomorrow, or maybe a year later, or maybe after 100 years, you don't know. But clearly, the capability to serve debt is also very important. Currently, the inflation is down, the liquidity is enough. The Fed is kind of considering and has been reducing the rates for quite some time now, and that has helped the economy to serve the debt. But the debt to GDP ratio, when you look at, is at the lowest level, and in terms of sorry, the highest level in terms of debt, which is a big concern in the US. Um, the other thing is because these debts, which are coming, every 100 rupees that you borrow as debt, and when you try to produce GDP, then you produce the GDP of 58 paisa. So therefore, you see the debt is increasing, and vis-a-vis the GDP size is shrinking because of the gap. So every trillion added in the economy in terms of debt is actually becoming more concern for the economy. So this is the data since 1952, and this clearly indicates that debt is a concern. Now, when you look at between Biden and Trump government, the deficit highest. This is the highest deficit which was seen, where Trump was at least could manage to maintain at 6.6% minus, U.S. government budget balance, the GDP under each administration. This is the data since 1900. You know, and there were many leaders who took over, like Mr. Obama had a target, fiscal target and monetary target, and balanced out in between that. But Biden saw that it was minus 7%. So this is under the concern. The other thing is that top 10 stocks records 37% of S&P 500. S&P 500, initially we talked about FANG, which is Facebook, Apple, Amazon, Google. Then we said magnificent 7 stocks. And then we looked at that the total number of top 10 stocks contributes 37% of the market cap, which means that the remaining 490 stocks as a market cap of only, they contribute only 63%. So which means that big is becoming bigger, and the mid and small are not growing to that extent. For the first time in last 22 years, bonds are yielding more than the stocks. This has never happened in the past earlier. And And this is a clear-cut indication that you have 10-year treasury yield and S&P 500 earnings both, which is mentioned here. And the first time in last 20 years, the bonds are yielding more than the stocks because of the debt. US household allocation to equity at record high. Uh, as an economy, they have more than 48% exposure to stock markets, which is on the higher end. So if stock market doesn't do well, then probably they will end up spending low. If they spend low, then obviously the economy will slow down. So in terms of percentage, it looks to be on higher end uh, as an economy. So what is the impact of Trump, because he's on the mandate now? So overall, it is bullish on some of the areas, which is equity. For example, Tesla. There is this. Also, there is this news going on. If WhatsApp and Twitter can be believed, then Elon Musk is uh, planning to be a part of the government. And when he takes over, you saw what happened with Twitter. He cut down the cost. He sacked many people, increased the overall efficiency. So if that is the case, then probably he would, if he joins the government out there and be a part of Trump's team, then obviously in order to bring efficiency, he might take some major calls. Uh, Commodity wise, gold and silver looks to be good in case of Trump taking over. The fixed income is tips, and crypto. You've already seen what is happening in crypto. Crypto index, they are already up by 30% ever since it has been announced that Trump is likely to take over. And it was observed in the past when during under the leadership of Trump, energy stocks and renewables were down. Oil sector was down. So if the oil sector would not do, if oil sector is something where he's not going to invest, then obviously the sector will go down, or maybe you will have a bearish view on that. And long end of the yield curve. We've already talked about the yields are going up in the US. US higher rates for longer period of time. The dollar index, because dollar is also strengthening, not only against Indian currency but across the globe. So dollar index is strengthening. And when you have too many news around this, then this is a clear example here that when you have the two center circles are of the same size, but the visual context created by the surrounding circle of the different size makes the center dots appear to be the different sizes too. So as you can see, when you have too many news around, then obviously you see that it starts exploding. China's largest stimulus we already talked about. uh, Recently, because of the slowdown in China, they announced $1.5 trillion of stimulus, and that worked for them for some time, but eventually their market crashed because it is from the hidden sources, because China government is something they don't share openly, unlike our regulators or US regulators. So from the hidden sources, it is estimated that they need much more than what they have given as stimulus to the economy. And as a result of that, a lot of FPIs are underweight in China. Indian stock market looks to be most expensive. We'll talk about the valuation in the next slide. We'll also talk about the RBI thing. So when you have too many news around it, so there is a saying that कुछ तो लोग कहेंगे लोगों का काम है कहना. So we will try and address and look at each one of them, what's happening in the economy, and we'll try and see to it that how the performance looks like of the Indian markets. We'll come to that, but here Indian equity sentiments. This is IESI. the indicator, Indian equity sentiment indicator. Fundamentally, Indian market looks to be positive. Valuation wise, it is neutral, and I'll tell you the reason why it is neutral and not the expensive zone. The sentiments are little negative. I talked about it. There were a lot of news about Indian markets, economy slowing down. So we will address each one of them in the next slide. And then we talk about the market trends, which is also a lot of news around markets in the last 1.5 months. And as a result of that, Indian markets also fell down by good 10%. When I say market trend, as in FPIs have sold stocks worth rupees more than almost $8 to $9 billion, $10 billion rather exact number. So what should we do? I think it's a time to stay calm, invest regularly, buy on dips. It's a market to buy on dips, and I'll give you the reason behind it. And concentrate on fundamentals.